Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris Mcintire. McIntyre Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your game plan for retirement with Northwestern Ohio's resource for that common sense approach to planning for our financial, our investment, our retirement futures. He is Chris Mcintire, president and founder of McIntyre Retirement Services. Chris, we always appreciate your perspective and the guidance that you provide here to savers and investors across Northwestern Ohio.
Thank you, Peter. It's always good to be with you.
Yeah, it's a great conversation. And Chris, we often talk about our financial goals and having the plan. And one of the things that we have talked about is that many savers and investors do have a plan. Now, some just wing it, but most that are successful in this do have a plan for accumulating assets during their working career. But you've talked about the fact that not a lot of those same savers and investors have a true written plan for what we'll call the second half of the game, how to use those assets to create the income they'll need from them in retirement. And that separation, that lack of the plan for the second half of the game we've talked about is what you believe is leading to a lot of the lack of confidence in retirement.
In today's retiree marketplace, if you will, Peter, we have to remember these folks have experienced an unbelievable run in the stock market, historic by any precedents. Even given the COVID pandemic, we've steamed right through that. We had one bad month. So they are just so used to blindly throwing money in their 401ks, and which is fantastic, obviously, because it has created these incredible sums of money like we've never seen before for folks. Okay. What they don't always realize is that, you have to make a transition now that you've accumulated these assets to, how do you make them last over the rest of your lifetime while you're taking money out of it? So what gets you, to the goal line or in the red zone, if you will, doesn't always get you across the goal line, because let's face it, we could have a substantial, downturn in the economy with all the money that's been printed, a real inflation threat, a number of different issues, not to cause alarm here, but just to, try to wake people up to not always expecting 15 and 20% rates of return on your portfolio, for as long as you both shall live, if you will.
Yeah. But we've seen those. We just can't count and rely on them happening consistently and reliably, because Chris, we've also seen the opposite. During 2000, the dot-com bubble crash, the market lost 50% over 3 years. During the Great Recession, the market lost 50% over 2 years. Even during that 1 month of COVID, the market lost over 30% in just 1 month. So it does not always go up, and our plans cannot count and rely on the market always going up, or these positive projections, we'll call it, not true plans, because it is not reliable, that will always see 7 or 8 or 9 or 10 or 12% positive rates of return. And I think that a lot of people do have a financial future that is somewhat dependent on those kind of very optimistic projections holding true. But Chris, if they don't, and in the back of our minds, we understand that that's not truly the likelihood. If that does not hold true, it could really put our projections for the entirety of our financial future very, very off kilter. And so we want to get a true plan together. You have encouraged the listeners to this program so often to get that written retirement income plan. And ladies and gentlemen, your opportunity to do that with Chris Mcintire is to sit down, have a conversation. He'll help you formulate that written retirement income plan. All you need to do is pick up the phone and give a call, 800-868-1194. That's 800-868-1194. And Chris, the income plan, it really has one primary goal, generating income, but there are many supplementary and secondary goals that having a written income plan will help us achieve.
Yeah, Peter, if you think about it this way, your investment plan may be plan A. All right, let's assume, for example, that the market's going to continue to run. The government's going to continue to print trillions and trillions of dollars and inject that into the economy. And that's going to continue to let things grow. Okay, so maybe your equity portfolio does incredible and carries you through. Okay, but what's plan B in case that the trillions of dollars that they're printing, injecting into the economy is only taking away future rates of return or future economic growth that would have come naturally, that all of a sudden got compressed within a 2 to 5 year time frame instead of a 15-year time frame. Okay, what is the plan to that you have in place to overcome what might be very below average rates of return? So again, that's where an income plan can help complement your investment plan. Our friend Dave Gaylor, as you know, wrote the book Income Allocation. We talk about this all the time on having a separate plan for income than you do for your growth investment vehicles. And everybody should be doing something that incorporates a little bit of both.
So having that income plan, in other words, Chris, actually helps to emphasize the importance of diversification.
Absolutely. And, in talking about, what do I use for my growth vehicles? What do I use for my income vehicles? How do I know that I'm diversified enough, that I've got enough eggs in both of these baskets so that they're not all going to get broken at the same time, which is the portfolio that many of the people listening today have. They're very heavy in equities, or or maybe they're overly conservative in all reality too.
And that balance, Chris, again, having that written retirement income plan is going to let us know with a little bit more certainty where the proper and appropriate balance of being conservative or being aggressive and growth minded and oriented might be. And in fact, one of the goals of having that written retirement income plan and one of the results of it is having the ability to identify what assets can be designed for continued growth and be a little bit more aggressive.
Absolutely. And the part of the portfolio that is set up for growth over the long haul, especially if you're listening out there today and you're 62, 65 years old and everybody in your family lived to be 90 or 95, hey, you've got a 30-year time horizon there. So we do not want to discount the ability of having money in those growth vehicles, which is very often stocks or stock-driven mutual funds, stock-driven exchange traded funds. And then to counterbalance that, the bond market can be awful finicky in today's very low interest rate environment. Number one, bonds will typically give you a cushion from stock market exposure. Okay? And then they also pay interest. So you have that income element there. Now, the risk in the bond market is if interest rates are going to go up in the future, that pushes bond prices down and can drag on your overall rates of return. It's kind of like, if you think about it now, all right, well, I had a CD 4 years ago that paid 4.5%. Today, it barely pays 0.5%. The same impact has happened in the bond market as well. So looking at some other alternatives, such as real estate, such as dividend paying stocks, such as the annuity space to generate income as well.
Well, again, we are talking with Chris Mcintire, the president, founder of Mcintire Retirement Services, an independent fiduciary advisor. Ladies and gentlemen, if you are looking for guidance in your financial life and your retirement planning, pick up the phone, give a call. He's willing to have that conversation with you, answer any questions that have been on your mind, and help you design, structure, and implement your game plan for retirement, both the first half and the second half of that game plan. The plan for growth and accumulation, he is very willing, able, capable of helping you design that and monitoring the investments and having the growth oriented portfolio. And once we turn the corner and are looking for generating income, designing that income allocation. It's all part of that written retirement income plan. Pick up the phone and give a call, 800-868-1194. That's 800-868-1194. Chris, so we've talked about a couple of the ancillary goals of the income plan, the importance of diversification being recognized and emphasized, continued growth on certain assets, generating enough income. And in fact, enough income is kind of a funny balance that we strike there, because enough can be on either side of this. There are some people that probably have an abundance of assets but are still afraid to spend because they don't know, they don't have a plan that's going to show them that they can make their money last. I think, Chris, some of our biggest regrets in life is when we look back and realize we could have done more and we didn't. We could have done things that we were too scared to do. And that's not what we want retirement to be about. So the concept of enough income, the written plan, helps us strike that balance and kind of find that Goldilocks, not too hot, not too cold, just right amount of income to make it last throughout retirement.
Correct, Peter. Up here we have an amusement park called Cedar Point, and it's a publicly traded company, and their stock has historically paid a 6 or a 7% dividend, the yield. So if you had $100,000, you're getting a $6,000 return on investment, regardless of the price of the stock. So that would be an income stock, we would say. Well, during the pandemic, obviously they shut down and they had to cut their dividend. So now all of a sudden it became a growth stock, not an income stock, just to give an example. So, that's where for many people in retirement, dividend paying stocks can, give you a little bit of peace of mind that, all right, I'm getting paid out on some of the profits from a Coca-Cola, McDonald's, a Verizon, some of those very big popular names that they pay out a percentage of their profits to shareholders. Okay. You take an Amazon, for example, that's a growth stock. The only thing that makes it go up is the people buying more of their stock to push the price up. And my wife does a lot to help push their price of stock up because he shows up at our house every day, right?
I got to say that I'm there too. I'm helping increase the price of Amazon. My wife, my family, plenty of Amazon boxes showing up on our doorstep as well.
Yes, Peter. And, so again, there are growth stocks and income stocks, just to kind of give a little clarity out there, and then even in the bond market space, we have high yield bonds, which are certainly more risky, but, hence the term high yield, they pay more interest rates. You can take a U.S. government bond, which is backed by the full faith and credit of the U.S. government for what that's worth in quotation marks. But they pay the least amount of interest right now. So maybe a 20-year U.S. Treasury bond is paying 2.5% right now. Man, it's hard to generate a lot of income off of that, and then you transition that into the bank CDs, and, we're not getting much interest out of that either. And that's our kind of a typical safe money strategy. Okay? Transition more into income on the annuity space and let an insurance company do what an insurance company has done. And, that is, in many cases, we use annuities as a safe money position. Okay. And then, to get some form of safe money return off of them in that 3 to 5% range on like what we would call the fixed index annuity, but also getting the guaranteed lifetime income. And many of these types of annuities also have the ability to increase that income by the growth of the annuity. So some of them are truly safe where you can't lose any dollars in them. And then they generate an income guaranteed for life on you and your spouse. And in many cases, unlike a pension that when you pass away, maybe your spouse only gets 50% of what you receive. In many cases, the annuity is going to pay the same income, whether or not you're alive or passed on. So your spouse doesn't take what we call a haircut in income.
So Chris, running back through that just briefly here, with a stock, if I own stock, I am part owner of a company. And there's kind of two components to being an owner of the company. The stock price represents the perceived value of the company. And we hope that as an owner, the value goes up. But as an owner, I also would like to be paid some of the profits of the company. That's the dividend. But those aren't guaranteed. The value, we've seen the market go up and down. It fluctuates. The profits, like with Cedar Point and COVID, they had to cut their dividends because they were not profitable during that period of time. So that's not necessarily a reliable stream of income. It's something that has produced growth over time, but not necessarily something that we can count and rely on. When we turn the corner and we look at bank rates, interest used to be something that a lot of people used to live off of. Protect your principal, live off of the interest was the old phrase and mentality of a lot of savers. But back 15, 20 years ago, you could get a 5, 6, 10% rate on your savings. That has come down dramatically. So again, not the same kind of income that we once were able to generate from the safe or more predictable streams. What we're trying to do with a written income plan is determine our withdrawal rate, determine our cash flow rate, determine our livable income throughout retirement. And with the third option that you discussed with annuities, we can actually define that. We can know what our cash flow rate is going to be, and we can find that safe withdrawal and cash flow rate that we can rely and depend on throughout retirement. That's why you include that as one of the tools and the options in the variety of different tools that you have available. That's why you include that in some of the plans.
Certainly is, Peter. And looking at all the different options that are out there, adhering to our fiduciary responsibility to clients, acting it within their best interest. And it's a win-win situation when you look at all of the different options that people may have for growth of their money, income off of their money, passing on a legacy of their money, protecting their money from nursing homes, from taxation issues, encompassing this entire retirement income plan, is one piece of the overall picture, if you will, and, if you think about it, the Tampa Bay Buccaneers won the Super Bowl, not just with Tom Brady. There were people playing defense. There were people playing offense. So kind of think about your retirement plan that way. I'm a hockey guy, but it's hard to make that reference. And not everybody's a hockey fan. So football's easier.
I get it. There's a lot of attention paid to Brady, but it's a team sport. He doesn't play on the defensive side, and the defense was important to help them win the Super Bowl as well.
Yeah, that's a great analogy. And, same up here between we live between the Indians and the Tigers, or the Cleveland Guardians, whatever they're calling themselves. That's going to take a while to adjust for this guy here. But, you might have an all-star pitcher, but you got people in the outfield that make incredible defensive plays as well. You need to think about your investment portfolio and how you're going to create income. Do we get some contractually guaranteed income that has the ability to maintain, some sort of cost of living adjustment, or the potential to increase that income as time goes on? Because inflation is certainly the talking point of 2021, and there is that is definitely going to be continuing into 2022. Inflation is too much money chasing too few goods. There is certainly no end to any of that in sight right now. It doesn't mean we're talking about 1970 here with, lines at the gas station for oil, but we're certainly, some supply chain issues, waiting on things to play catch up, has driven up prices, and everything from food, gasoline, to jet fuel, to trying to find a new vehicle, for crying out loud, computer chips, that type of thing. So
housing prices, lumber, materials, commodities, things that we buy at the grocery store, healthcare, almost everything across the board. And again, ladies and gentlemen, if you would like a written income plan, a written game plan for retirement, pick up the phone, give Chris Mcintire a call, 800-868-1194. That's 800-868-1194. But Chris, that's another one of those big factors that you have talked about is missing in many of the plans that you help review for Northwestern Ohio savers and investors. And it's not that you design everything from scratch many times. You help people complete the plans that they already have. But one of the missing components you've mentioned, you've noticed, is that a lot of people's plans or projections kind of assume a flat rate of income is all they're going to need throughout retirement, they don't account for that inflation, which is at a time like this, a obvious oversight in the planning. When you're helping people design those plans, you try to help them include and incorporate some amount of potential growth for income, or in some cases, even some guarantees for increasing income throughout time.
It's one of the most important things that I think we do for folks, whether they realize it or not, that we are accounting for an inflationary cycle. For those of you that get Social Security, you get a cost of living adjustment on it. Sometimes you do, sometimes you don't. This year, going into 2022, it looks like there's going to be a significant cost of living adjustment, somewhere between 5 and 6%. They'll announce that here at the end of September. For 2022. The downside to cost of living adjustments from Social Security is they are offset by Medicare premium increases. So you have to go out and determine and make your own income increase without threatening your portfolio. That's what we help a lot of people do. And just to give it an analogy for folks, if inflation is running at 6% on the things that you buy and use, okay? Not just urban wage earners, but what retirees do. So like medications, healthcare, a lot of the things that retirees spend aren't necessarily the things that their grandchildren spend money on, if you will. So a greater impact. But if inflation is running at 6%, in 12 years, you need twice as much income to do the same exact thing you're doing today. Think about that.
And if that's not included in your plan, that means you're cutting lifestyle, you're cutting back in certain areas. It's not what we envision retirement to be about. That's why you need to carefully examine that written retirement income plan and make sure that you have accounted for several of the items that are, quite frankly, often overlooked in planning projections that we see on a regular basis. That's why we offer the complimentary review and the strategy session to help identify if there are areas that have been overlooked, if there are potholes or blind spots that are missing from the current plan. Ladies and gentlemen, the things that we don't know are often the things that are in the back of our mind, or the things that we have forgotten to address, or the things that concern us and cause us to live a less than or a just in case retirement where we're not living life to the fullest. Having the plan is what will provide you with the ongoing confidence throughout retirement. Pick up the phone and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. And Chris Mcintire, the team from Mcintire Retirement Services, willing to sit down with you, have a conversation in person or through the safety and convenience and ease of technology through a virtual meeting. We can get it done that way still, but have that strategy session, discuss your goals, put those in writing, and then help you design the plan, your game plan for retirement, specific recommendations based on your goals, and that conversation on how to achieve them, the steps that you can take, the executable action items. That is what the game plan for retirement is all about. If you would like to get that in your hands, 800-868-1194. That's 800-868-1194. Chris, another area that's kind of often overlooked. We focus on accumulating this lump sum, but all too often we see that how much of it we actually get to keep is not discussed. And here in 2021, there are some specific tax opportunities that right now may be the time to act. It may be use it or lose it at this point in time for some of these tax opportunities. And yet a lot of people aren't even having the conversations about the opportunities to keep more of our money.
You're right, Peter. Roth conversions is something that you and I have been speaking about, diligently throughout our radio careers here together, and understanding that tax rates are at historically low levels right now. So, taking advantage of strategies that allow you to keep more of your dollars legally, obviously, and also pass on more of your dollars to your children and let them keep more of it. Because what good is it if the IRS is a 30% beneficiary of everything you worked for, and you have 3 kids and they get to split the other 70%, for example? So there are opportunities out there before taxes increase significantly, or we get some legislative changes that, might not be a tax increase, but they force more of your money to be taxable. Let's say it that way. And an example of that would be IRAs. Since the Secure Act was passed in December of 2019, if you want to leave money to 2 children and you pass away and it's an IRA, well, if they're over the age of 18, they've got to empty that entire IRA by the time they're 28. Whereas previously they could stretch that out over their remaining life expectancy. So that wasn't a tax increase, but it forced more money to be taxable sooner, if you will.
Yep, it really amounts to a windfall for the IRS as one generation passes wealth to the next. But again, Chris, the written income plan is going to address that. And I know that it's not a goal for every saver and investor right now to leave a great deal of wealth behind. I think the previous generation, they lived off of Social Security, they lived off their pension, their personal assets, their wealth, their savings, they did really intend more often to leave that behind for their family. But today's generation, looking at the fact that we have to take an income from our savings, they're worried about just having enough to get through their own lifetime and not as concerned about leaving a great deal behind. But here's the thing. If we do have that written retirement income plan, Chris, that addresses all of these other factors that we've talked about today, then the likelihood that we will leave something behind, a positive financial legacy, is increased. And therefore, as we're designing that plan, we talk about how to transfer those assets and what that will mean and how to do that efficiently so that the IRS isn't our largest beneficiary.
Yeah, correct, Peter. And, and staying current with legislative changes is something that I think we do very well for ourselves. We employ a special IRA technical consultant that we keep on retainer for specific issues regarding IRAs, 401ks, 403bs, that type of thing. We focus a large amount of our time and effort on Social Security strategies, on understanding IRA distribution laws, on understanding, all of the different elements that are available for growth, for income, for safe money positions, legacy planning with life insurance, long-term care planning with hybrid policies out there now to encompass, not just income, but this entire retirement plan that might include Medicare, might include some long-term care, might include nobody cares, right?
Unfortunately, that's what a lot of people sort of do with that healthcare side of planning, is bury their heads in their sand. They don't care to address it, but we are still left exposed to the potential risks. So again, that's why we need to talk these issues through in the income planning process. Many additional ancillary benefits and goals of that written retirement income plan, from ensuring continued growth on additional assets, generating enough income to last a lifetime, protecting savings while simultaneously making withdrawals, minimizing taxes, addressing inflation, addressing healthcare expenses, leaving a legacy to loved ones and family members. All of these things can be benefited from having that written retirement income plan. I know that these are the goals of many of the savers and investors that we talk to, Chris, and that's why we offer and make the availability of that complimentary review, the strategy session, and then to put that plan together, the game plan for retirement. Ladies and gentlemen, if you would like Chris Mcintire and Mcintire Retirement Services help and assistance there in designing and implementing the plan, or just reviewing your plan to make sure that it is complete, pick up the phone, give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. When coaches formulate that game plan, Chris, they don't just plan for the first half of the game. They got to come out after halftime and have a plan for how to win the game if they want to be a contender, if they want a successful outcome.
Yeah, and that coaching staff surrounds themselves by wonderful support staff as well. We do the same thing through many of our partners that we have network agreements with, that helps us with design, that helps us with implementation, recommendations, research, and so on and so forth. So yeah, we're not just a one-man show here. We have I might be the head coach or the quarterback, if you will, and we have a lot of important supporting staff that help us all.
Lots of tools and resources available there, ladies and gentlemen, with Mcintire Retirement Services, bringing together a comprehensive, cohesive, holistic look at planning to help you achieve your financial goals. That's what the game plan for retirement is all about. If you would like to get that plan in writing, a snapshot of where you are currently, a review of your current accounts, the risks that you're taking, the fees that you're paying, the taxes that you may be liable for, a discussion of how to achieve your financial goals into the future, how, when, and where to claim and collect Social Security, how to maximize available sources of lifetime income, how to translate the savings that you have done into the additional income that you'll need to support your lifestyle throughout retirement. Pick up the phone and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Chris, we always appreciate the time that you provide here on the program to offer guidance and perspective. A qualified, experienced advisor, ladies and gentlemen, here to help and assist. If, again, you would like to take advantage of that offer for the complimentary review, the game plan for retirement, pick up the phone and give a call now, 800-868-1194. Once again, Chris, we appreciate the time. Thank you for being here on your game plan for retirement.
Peter, it's always good to be with you. It's my pleasure. Hope everybody has a safe weekend out there. Take care, everybody.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris Mcintire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.